Lies are driving the housing boom. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at an article from the ABC. Lie loans. Lies driving the housing boom. What do you reckon? Is anyone at all shocked or surprised? And I know we've looked at this before with regards to auction clearance rates. How, there's actually a statistical range in what the numbers could be, but they publish what they consider the most likely trend. But what we're talking about here is a little different, guys. This is, people dodging the paperwork, it seems, on their mortgages. So what do you reckon? Are you all surprised? So liar loans on the rise as risky mortgages drive the house price boom. Now I wonder, one thing I'm noticing from a lot of these ABC articles and a lot of commentators, there's a push for more bank regulation and, more restrictions on the banks to put out mortgages as, either a way to limit their ability to make mortgages or to hopefully curtail the booming housing market. Now, I found that banks, at least in my experience as a small business owner, and we're probably a different breed, we really get done through the ringer to get a loan. I remember it was quite frustrating when my staff would have it easier to get a home loan than me. It just doesn't make sense. Anyway, let's look at this. Australian home prices have surged almost 20% over the past year. And just to remind everyone, I'll bring this chart up. We just had our first recession, everyone. In 28 years. Houses are up 20%. An investment bank, UBS, has warned that a record level of liar loans as buyers chase the market could be one reason why. I mean, here's the thing. There's the bank's assumptions of what you can do to buy a house, of all your expenses. They'll assess it. And then there's reality. And people may fudge the numbers a bit on these things. I'm sure they do. Let's have a look here. We'll bring up. Hang on, let me bring these up. I want to bring up some charts here. We've got people in negative equity. They're much lower. They're going down. You've got people that have made prepayments. They're ahead, guys. And you've got liquidity buffers there for indebted owners and renters. So if you're hearing this or you're reading this and you're saying, "Oh, look at this liar loans. The market's going to crash. A few interest rates will go up and all get hammered." I don't know. I don't know, honestly, because people can really bend a lot if they want to. If they want to keep their house, they'll do whatever they can. Now, if this is with investors, so if it's the investors doing the line, that may be a bit different, so we'll have to see. The bank's annual survey of 900 people who took out a mortgage over the past year showed 41% submitted loan applications that were not completely factually accurate, so-called liar loans. That is a record high in the 7 years UBS has collected this data, up from 38% last year and 27% back from when their survey started in 2015. Now, I wonder if this big 40%, I wonder if a lot of them, or 41%, it's because they got their 10, 20 grand out each, husband, wife, for their deposit, and then maybe said, "Oh yeah, we saved it. Yeah, no, we didn't get it from the super." I wonder if that's having a play into this. What do you reckon? So, it is noticeable that there was a brief dip during the Banking Royal Commission hearings in 2018, at a time when the banking and financial regulators were also cracking down on risky lending. Okay, here's the thing, guys. If you want a housing correction, you've got to allow risky lending. And they've got to allow the loans to fall over and people to be forced to foreclose. That's not really happening, though. So there we go. We're above average. Go Australians! While the majority of those who fudge the figures say their applications were mostly factual and accurate, just under a third of those who lied to their bank said their application was only partly factual and accurate, holding at a record high. Why would you answer this survey? The most common areas of inaccuracy were underrepresenting living costs, 34%. Underrepresenting financial commitments, 28%, and overrepresenting income, 22%. Well, living costs can be adjusted. They can be adjusted. You can cut afterwards if you have to. Worryingly, the size of the misrepresentations also went up in 2021. Of those who overstated income, 36% did so by more than a quarter. Likewise, 39% of those understating living costs did so by more than 15%. Oh, don't worry, inflation will catch up to you even more. UBS said the rising risk of home lending fueling the current property boom was best captured in a record rise in very high debt-to-income mortgages, where the borrowers owes at least 6 times what they earn each year, to 21.5% of loans. Amid home price booms, 18.3% year on year. Home prices booming 18.3%. Highest since 89. So can you blame people for wanting to get in? Doing whatever they can to get in. It's our culture, is housing. The government has shown that they will step in to protect housing. Housing is what the government uses to stimulate the economy. And if we have, a dramatic fall, the question is, the question I put you is, will the market crash, guys, or will the housing liquidity buffers that people have be long enough to keep them going before the government can step in? To hell with the future. Because that's what it feels like. That's what it really feels like, doesn't it? You tell me, everyone. I mean, what Mortgage Keeper is meant to be a terrible joke I make. Would you be shocked? Would you actually be shocked if Mortgage Keeper turned into something real? And I'm not talking about me making a t-shirt or a stupid mug. I'm talking about the government, creating something like that. So, this has been aided by a reduction in the interest rate at which loan applications are being assessed, which is now around 2.5 percentage points above actual mortgage rates, down from 3% when tougher so-called macroprudential lending rules were still in place. So see, here you go. See, they're assessing it on 2.5% higher than it actually is. So are we going to see, here's the question, will we see like an overnight 2% increase in rates? How hot would the economy have to be going if the Reserve Bank would do that? Could you imagine the political fallout if that were to happen, regardless of who's in charge? So that it's going to happen over time. It's going to be slow and steady. So, as with previous UBS liar loan surveys, borrowers who used mortgage brokers were far more likely to submit inaccurate applications, 44%, versus those who applied directly to the bank, 29%. Well, yeah, that's because the mortgage brokers have to jump through so many bloody hoops now they've got to do more work. The banks can just ignore it. In the vast majority of those cases, borrowers said the mortgage broker advised them to falsify their applications. Okay, so it's the evil mortgage brokers, guys. They're the ones at fault. They're the ones at fault. Sure. Property investors were also more likely to falsify their loan applications at 53%, with one investment property and 57% of those with two versus owner-occupiers at 31%. Okay, so this here is the real takeaway. Property investors are the ones lying the most. That's what matters here. Because they're not going to be as emotionally attached to these investments as other people. So it's going to be the investor stock that may be more at risk of these liar loans falling over. So can you see that happening? Or they'll just up the rent. They'll just up the rent and neglect maintenance. So, Regulator plays down the home loan fears. The same morning UBS released its latest findings, banking regulator APRA appeared before the House of Representatives Economic Committee with a very different message. The issue of concern at present is that there is an increase in high debt-to-income lending, but it is offset against the number of other metrics which are going in a more positive direction from a macroprudential perspective, APRA Chair Wayne Burrs said. Our supervision tells us balance sheets are still strong, lending policies are being sustained, and there's no obvious poor quality lending going on. Mr. Burrs pointed to a decline in high loan-to-value ratio and interest-only loans as counterbalance to any perceptions of rising risk. Well, if you've got houses going up 20%, the decline in high loan-to-value is probably a good thing, but that might explain. I guess that explains the previous loans. I'm hoping they're assuming the new ones. Although it must be noted that strongly rising house prices drastically pushed down. Okay, yeah, exactly that. Despite denying evidence of a deterioration in lending quality, He did admit APRA was cautious of the current environment and the way it could play out. It's really looking at household debt levels and the extent to which there is potential for household debt levels to run well ahead of income growth levels for an extended period. And I think the Reserve Bank governor said he would be uncomfortable with that, and I would also be uncomfortable with that. Well, it's going to happen. This has been happening for the last 30 years. Why are you uncomfortable with it now? I guess it's just gone even a bit further ahead. Housing affordability stretched, admits Westpac boss. These concerns seem to align with UBS's predictions that regulators may move to tighten home lending standards, but probably not for some months yet. Amid ongoing lockdowns and with uncertainty about the pace of recovery, it still seems unlikely there will be policy tightening before May 2022, the bank's analysts wrote. We expect dwelling prices to grow 20% this year and by at least 5% next year, albeit closer to 10% is likely. Housing credit growth should accelerate to greater than 7% year on year and total credit growth near 6%. Consequently, there's likely to be a case for macroprudential tightening in the second half of 2022. On Thursday, Westpac Chief Executive Peter King told MPs housing affordability was at its worst levels in years. A preferred metric of housing affordability that the Westpac economist team uses, which is how you build your deposit for an average dwelling, is highlighted against that housing affordability is stretched, Mr. King said. It's at its worst level it's been for some time. In my mind, all asset prices have gone up with low interest rates and plenty of money in the economy. And I think there's just supply and demand. So one of the stats I look at is the number of houses being listed versus bought, and we've still got more demand than supply, so that's pushing prices up. So there we have it, everyone. Liar loans, fueling the housing boom. What's the solution, or really the takeaway to this? I mean, should we be afraid? Should we be worried that liar loans are going to crash the housing market? Will it all come tumbling down? I don't know, guys. It's all too much fear and hysteria, I think, in some regards. Property it's the religion for the majority of Australians. It is our cultural obsession, and anything negative gets the views. I know. I'm a YouTuber, and I don't know, guys. You know, there's still a 2.5% buffer there, and I honestly think with the number of people that have liquidity buffers, with the ability now in the rental market for investors to just rents to go up to meet those risks, I can't see anything of concern in the short term. You know, it's not like boom. You know, we got to get the big scary icons and thumbnails for this type of thing. I think it's a bit of hype, honestly. I think we're just going to keep plodding along like normal. And, you know, if a few people lie on their applications, sure, a few more than normal, well, it's because interest rates are so bloody low. That's probably why. That's probably what's driving it. They're saying, you know what, rates are never going to get lower than this. Stuff it, let's just make it happen and we'll sort it out. I bet you that's what's happening. What do you think, everyone? Is it something you're worried about? Or are you hoping for a correction or crash to the market? I know a lot of people are. They want housing to be sensible and more affordable. And it feels like that's just not the Australian way anymore. Anyway, thanks for watching. Like, share, and subscribe to the channel. If you're a fan and want to support us, there are a few ways you can. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake for the share trading. SelfWealth, when you sign up, we each get 5 free share trades. Stake at the moment is about to bring in Australian share trades, which are actually CHESS sponsored. They're the ones that you want because it's under your name. And I think for the beta, there's $0, and then they're going $3 trades. So that's one to keep an eye on, everyone. I'll put a referral link down there if you want to sign up for that. You can also help us out by using Amazon, eBay, Independent Reserve, or AussieBroadband, buying our own merch from HeiseSays, or using Gold Pass or PayPal. Take care, everyone. Have a great day. I'll see you next time.